Audio, 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 audio. Okay, we are ready to roll. Let's get ready to roll. Hey, Doc, what's happening? Just getting started. Just getting started. And Governor's here. Cool beans. Garrett, Joe, Beverly, Susie, Mark, Tatum. When you first start out, do you trade penny stocks with more shares? No, not me. I did penny stocks decades ago. Getting in is the easy part. Getting out is a pain in the butt. Simone, how are rude dudes here? Mike, DJ. Some comments are going to be, okay, all that kind of nice, neat, fun stuff. All right, so Simone wants to take a look at advanced auto parts. Well, let's take advanced auto parts. Let's take a gander. Who do we got? Diesel Dan, Ron Boudet, Kona Guy, UAE 600. How are you doing? Sergio, how are you? Old dog. Hey, old dog's in the house. All right. Advanced auto parts. Because she asked very nicely. So let's take a gander at advanced auto parts. Oh, before we even get started, good evening, everyone. My name is James. This is Dividend Stock Talk, where I show you how I invest in dividend stocks for a safe, predictable, consistent 1% per week. Now, that is over 50% per year. Sounds unrealistic, but if you give me just a little bit of your time, ask some questions if you feel so inclined. Anita, how are you doing? If you're so inclined, ask some questions. I have no problem whatsoever answering questions, but I do have some simple rules. Number one, I like to stay on topic. I don't want to talk about anything else other than dividend investing for weekly cash flow. Now, make sure if you want me to take a look at some stocks you have in mind, I'd like to make sure that they have at least 20 years of increased dividends and weekly options. How about you, Anita? I am doing very well. Thank you for that. Now, also, this trading strategy was created for my 9-year-old daughter. Luke, how you doing? When she was 9 back in 2008, so there was a huge challenge. How do you teach a 9-year-old how to trade? Old dog wants to take a look at Dollar General. Cool beans. We'll take a look at that in a little bit. What are you doing? I'm teaching people stuff. So as I was saying, when my daughter was 9, it was very challenging to teach her how to trade efficiently. Okay, so to teach a 9-year-old how to trade on the stock market, which a lot of adults can't even get it right, it has to be simple, safe, predictable, consistent, and no way for her to lose. We all know if a 9-year-old starts losing and does everything wrong, she's going to cry. I'm going to feel bad. Mama's going to get involved. I'm going to be sleeping on the couch, and it just doesn't go well from there. So, simple, safe, predictable, consistent, and no way to lose. 5 criteria I had to overcome. All right. It took me a while to figure it out, but here you go. Number 1, I got 5 rules. Number 1, never buy something you don't understand. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options are a must. Winter Kit, how you doing? And number 5, make sure the numbers work. Now that may sound a little confusing at first, but as the night progresses, you will see exactly how simple it is. First off, always first off, start out with a list of stocks that you like. Now, when I say I like companies that are consistently profitable, well, how do you find those? It is simpler than you think. All right, make a list of all the companies you like. Somebody has already done it for you. Number 1, Dividend Kings list. There's 54. I don't have my tea. 54 companies that have consistently increased their dividends to their shareholders for more than 5 decades. That's 50 consecutive years. Luke, this live is about making money, trading calls before dividends, paid dates, something like that. List number 2, the Dividend Aristocrats. Now, the Dividend Aristocrats, 25 years. I think it's 67. 67 Dividend Aristocrats, 25 years. Salam, namaste. 25 years of increased dividends. That's the Dividend Aristocrats. The Dividend Champions, 150 companies that have consistently increased their dividends. Dennis Mancini's in the house. Dennis! 150 companies that have consistently increased their dividends to their shareholders. Their rules are just a little bit different than the aristocrats, but still 25 years of increased dividends. List number 4, the Dividend Contenders. 10 to 24 years of increased dividends. 300 companies. Okay? And then I like to throw list number 5 just for the fun of it, because everybody knows who he is. He thinks he's pretty good at it. Warren Buffett's list 2024. Those 5 lists right there will give you over 300 companies that are consistently profitable and have weekly options. Just those 2 key. That's it. Just those 2. Consistent profits through dividends and weekly options. I like weekly cash flow. I grew up in the 70s, 80s, and 90s. So when I went to work, 8 o'clock in the morning, Friday afternoon, 5 o'clock, we got paid, we went home, we enjoyed the weekend. Same thing with the stock market. It opens up at 9:30 a.m. Eastern Standard Time, and it goes right until 4 p.m. Eastern Standard Time. Perfect for me. I'm retired. I don't have the luxury nor the desire to take money and put it into a company and wait for it to grow. Nope. I'm looking for cash flow only. No speculation. No capital appreciation, just weekly, consistent, safe cash flow. That's all I'm looking for. So if we can stay within those parameters, great. We'll get along just fine, and we'll be able to make money together. Well, I'm just showing you what I do. I don't give advice. I just look at numbers. Wetback, what's happening? I just look at numbers, and I give you my interpretation. They are not meant to be recommendations. They are not meant to be tips. Okay? I always insist everybody do their own research. Never blindly listen to anybody online. Even me. Okay? I might tell you something, right? I would like to know. Well, whether you do it or not is totally up to you. But I would like to think that if it's your money on the line, you will do some due diligence, do some research. Don't blindly listen to anybody. Always make sure it makes sense to you. If it sounds too good to be true, it probably is. Now, a few things. I don't do cryptocurrency. I don't do futures. I don't do Forex. I don't do those, what are those quick contracts or smart contracts? I don't do those. Okay? If you are approached by someone saying they are me, at the moment, there are 28 people pretending to be me, using my image, using my videos, using all the nice, neat, fun stuff. But none of them comes live and says, it's me. So if you really want to talk to me, send me your phone number. I will give you a call. We'll have a nice chat. I have no problems talking to people and showing them. I'm not trying to sell you anything. I mean, yeah, I have stuff for sale, but I'm not selling anything here. Okay, so you won't hear a sales pitch from me here. I will let you know I do have a morning trading group. That is a paid for thing, but I'm not trying to sell you anything. I'm just trying to enlighten you, showing you what I do. Big Vaughn, want to learn your analysis factors. 20 years of experience is huge. Thanks. Big Vaughn, way to go. Big Vaughn, any questions you got? Throw them out there, dude. I'll help you out as best I possibly can. Now, I don't know everything. Okay, I don't have any formal education, but I do know how to count, and I do know how to point. Pointing is very important in this job, because when we're looking at a chart, this is a stock chart, I got a point. Where's the high? It's right there. Where's the low? It's right there. Pointing comes very handy. I didn't have to go to school for that one. Luke! Luke, I am your father. Hey, Luke, Bitcoin, from my understanding, 99% of crypto will collapse as soon as quantum computing comes out. That's the boogeyman in the industry. Now, I'm not 100% sure that's going to be true, because you're always going to have rebels. You're always going to have people on the side that refuse to conform to whatever it is they're trying to push down our throat. It is what it is. When the EU came to Europe, Britain refused. Said, nope, we'll stay with our pound. We're perfectly okay. They got a lot of kickback, and got a lot of flack on it, got a lot of hassle, but they said, no, we're good. We will keep our currency. I kind of hope the US will do the same thing. Nope, we're good. We'll figure it out. You let the market take care of itself, and we, the people, will figure it out. We just got to get government out of our pockets. And then the cream will rise to the top. As long as they not keep robbing us blind, we should be fine. All right, let's get started. First stock on the list today is going to be AAP. See where the pointing comes in handy? AAP, Advanced Auto Parts. 5 things you're going to see a lot of 5s. 5 things I look for when I look at any chart. Okay, this just so happens to be the 1-year chart. Okay, so today and 1 year ago. First thing I want to look for, the high. Second thing, the low. Third thing, where was it a year ago? Fourth thing, where is it now? And fifth thing, the direction. Look, up, down. That's pretty freaking easy. Okay, so I don't like buying at a high. Okay, not there. And I don't like buying at a low. Well, it's almost at a low, but I want to take a look at it, because you're going to make most money buying low and selling high. I don't understand it while people say, oh, look at McDonald's, it's way up here. Oh, look at Nvidia, it's way up here. Oh, look at this, look at that, it's way up here. No, I don't buy high waiting for it to go higher. Nope, that's not what I'm looking for. Okay, I make most of my money on the way up. I only look for 1%, which is easy to do once you understand how the game is played. So let's the games begin. All right, so now I trade weekly options, which means they expire on Friday. Okay, an option gives you the right, not the obligation, to buy a stock at a certain price by a certain date. Okay, I like that, because if you put your odds and probabilities in your favor, well, that's kind of tipping it to your side. Well, tipping it to my side. So here's how I look at it. Number one, if I use only dividend stocks, right, I cross-reference with when do they pay their dividends. That's why it is important to have dividends, because stocks only move for 2 reasons. Reason number 1 is what is called an unknown event. That means something just pops up out of nowhere. A lawsuit, death of a key employee, a natural disaster, tornadoes, all that kind of stuff. Luke, AAP valuation now as 2009. That's 15 years and no growth. Also has negative earnings per share. Seems risky to me. Okay, Luke, I agree with you with the information that you're portraying to me, but you're looking at it as if you're going to buy it and hold on to it forever. I'm looking at it as if I'm going to buy it for 2 or 3 days, 4 or 5 days, and then get rid of it. Okay, just hold tight. You will see how the whole thing unfolds. Okay, now when I say 2 reasons, known and unknown, an unknown reason just pops up out of nowhere. Do you remember when the Exxon Valdez crashed in the Northwest? Nobody knew that was going to happen. British Petroleum sprung a leak in the Gulf of Mexico. Nobody knew that was going to happen. A big, huge tornado, hurricane, floods come out of nowhere. Nobody knows they're coming up. They just pop up. Little Ducky Gamey, hello, how are you today? All right, so that being said, that is an unknown reason. We cannot plan for that. They just pop up, say, hello, what are you going to do now? No, you can't plan for that. The second is a known event, something that we know is coming up. Earnings, dividends, reports, seasonality. What do I mean by seasonality? Winter, spring, summer, fall. Different stocks react differently towards the winter, spring, summer, and fall because it's just the, let's call it temperature, the atmosphere. Ooh, how about this? Why does Weight Watchers go up the first of the year? The first couple of weeks of the year, Weight Watchers always goes up. Hershey goes up the first week of February. Okay? Certain stocks move predictably based on the calendar. That's why they call it seasonality. We take a look. How do stocks react when it comes Christmas time? Black Friday, okay? Cyber Monday, all that kind of crap. Do stocks move up because of those events? Of course they do. That is a known event. That's what we can plan for. So, earnings, okay? I don't really like them, but they do react. Stocks do react to them. Dividends, stocks do react to dividends. So this is what I like because dividends are more consistent than earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks goes up. Boggles the mind, but it is what it is. But dividends have a tendency to make the stock go up in value just before the EX date. Now, what's the EX date? The EX date is the last day the stock trades before the dividend is paid out. So, if you want to collect the dividend, there's 4 dates to remember. The announcement date. Basically, they're telling you, hey, this is ABC company, this is the dividend we're paying, and this is when we're paying it. It's the announcement date. Self-explanatory. Date number 2, that one's more complicated. It has no rhyme or reason to it whatsoever. It's called the EX dividend date. What the hell does that mean? Announcement date, I can understand. Hey, we're paying a dividend. Announcing that you're paying a dividend. EX, what the hell does that mean? EX date is the last day the stock trades before the dividend is paid. That is represented by all these little green dots. Okay, all these little, seen them? Now, if you don't know, the screen behind me is live on YouTube at this very moment. I broadcast live this screen so you could sit in your nice, easy, comfy couch, your recliner, grab some popcorn, a beer, a soda, whatever you like, and just relax. And you'll be able to see these numbers or these letters a lot easier than you can on your phone or your iPad. Okay? That being said, each one of these little green dots, take a look. DE, John Deere, NLY, Annaly, US Bank, Mandalese, Humana, Cisco, Comcast, American Express, Bristol Myers Squibb, JP Morgan, Cisco. Yeah, 2 Ciscos. Is that funny? Okay. CSCO, Cisco. SYY, Cisco. 2 different companies. Totally different companies. Both named Cisco. Is what it is. Marvel, Verizon, AT&T, Oracle, Delta Airlines, MasterCard, The Gap, Bank Mellon, Colgate-Palmolive, Procter & Gamble, so on and so forth. I have over 300 of these little dots on my calendar. Why? Because these companies pay a dividend on average every 90 days. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. We are currently in the 5th week of the 4th quarter, also known as week number 44 of the year. Okay, it's 52 weeks in the year. We only have 8 left to go. Something like that. Anyway, so if I want to buy one of these stocks and collect a dividend, or if I want to buy it and just collect a 1%, which is what I'm looking for, I will buy it 2 weeks before the dividend on a Monday. Now, the reason why I only buy on Mondays is because I like weekly options. One of the safest trading strategies there is the dividend, is the covered call. That's where you buy a stock and you sell somebody the rights to buy it from you for basically the exact same price, and you collect the premium. The premium is usually 1% or higher. And if you could do that safely every single week, well, that's over 50% per year. And that's what I've been doing for the last 15 years. And that's what I'm going to show you. I'm not just going to tell you that you can do it. I'm not just going to tell you that there's really cool software that I have that I can sell you. No, I'm actually going to show you. After this point, after tonight, you don't need me. It is actually that easy. I'm going to show you everything. Now, I do have the morning trading group, just in case those people who want to join and follow me. But anyway, first thing you do, find the stocks that you like. 9,724 different companies that you can choose from any day. Out of those, only about 2% make it to my list. It says only about 300 of those 9,724 companies have 20 years of increased dividends and weekly options. Okay, they go together. Okay, and you will see how they go together in a little bit. So we're going to get to that in a second, or a couple of seconds, whatever. So once you take your list of stocks, if you find a stock you like, great, put it into the dividend calendar. Now you can go to Google, look at EX dividend calendars. There's a whole bunch of them. What you see behind me on this screen, this is Think or Swim. Okay, I have nothing to do with it. I don't get any commissions by suggesting it to you. I get no kickbacks, nothing like that. I've been using it for 20 years and I just freaking love it. Now, 15 years ago, I wrote a book on how to pick a trading platform. And I actually dove in and I looked at, I think 15 or 20 different trading platforms at the time. Because at that time, 20 years ago, when I first started, it was $125 commission to get in. And then it was $125 commission to get out. So that's $250 just to get on the dance floor. Yeah, lots have changed since then. But anyway, yeah, I looked at a whole bunch, and this is the one that I found that I like, and I've stuck with it for the past 20 years. Now, Tom Sosnos, you probably don't know who he is. He's the one who created it. He runs Tasty Trades nowadays. He sold it to TD Ameritrade for an ungodly amount of money. TD Ameritrade got bought out by Charles Schwab. They own it now. You can go online, download it for free, but you do got to contact Charles Schwab and say, hey, I would like to use this software. They'll let you use it for a month or two, and then they would like you to move your accounts there. That's what I use. It makes it easier for me to communicate with people if everybody's using the same platform. Like I said before, I don't get compensated in any way, shape, or form. I just find it easier for me. Okay? That being said, you take whatever stocks you like, put it into the calendar, and it automatically puts it where it belongs. Okay, so October. Okay, the first week of October is the first week of the fourth quarter. Now, Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, NTAP, and Cisco all pay their dividend on the first week of the quarter. So quarter one, first week. Quarter two, first week. Quarter three. Exact same stocks every 90 days. Now the beauty about that, you get 300 companies paying a dividend every 90 days. There's only 66 trading days in a quarter. How much you put in each stock in general. Okay, so if I have a $100,000 account, I want to do 5 trades. 20, 20, 20, 20, 20. That's 100 grand. Okay, you want to do 10 trades? 10, 10, 10, 10, 10. Figure it out, whatever works best for you. I try to keep all my trades as even as possible. Doesn't always work, but I do make the effort. Okay, so once you put it in, once you decide what stocks you like, that's step number one. Find the good companies. Put it into a calendar. By when they pay their dividend. Because you know one thing right there. The stocks have a tendency to increase in value as they approach their EX dividend date. That's step number one. Step number two is take a look at the chart. See what it looks like. Okay? It's not that difficult. 5 things. High, low, was, is, direction. Take you not even 2 or 3 seconds. Where's the high? Right there. Where's the low? Right there. Where was it a year ago? Over there. Where is it now? Right there. What's the direction? Up, down. That's the 1-year chart. Then I like to take a look at the numbers. Before I even jump deeper into the chart, I want to take a look at the numbers. Now, if it was at the high of the year at today, it would be a no automatically. I like it when it's low like this because I look for the bottom as it turns around to go back up. That's where I like to jump in. Okay, now remember I said rule number 5, make sure the numbers work. Well, here's the numbers. What am I buying it for? Okay, let me do this, make it easier for you. Okay, These are the numbers you're seeing anytime you're making a trade. Okay, open, high, low, close, bid, ask, volume. Well, the open basically is what it is, okay? The market maker decides what to open the stock at that morning. There it is right there. The high of the day, well, that's self-explanatory. The low of the day, that's self-explanatory. The close of the day, 3:59 p.m., that was the price. Self-explanatory. Open, high, low, close. All self-explanatory. Even volume is self-explanatory. How many shares traded that day? Well, for Advanced Auto Parts, there was 2,763,000, blah, blah, blah. A lot of shares traded. Pegasus notes, whatever. Okay, why not just Peter or Jack, Fred? Some people come up with weird names. Okay, so what can I buy it for? All right, that's the first thing I want to see. What can I buy it for first thing tomorrow morning? Now, is it guaranteed to open up at this price tomorrow morning? No, but it's usually right around that price. The math never changes. So now, we're going to take a look at the option chain. Now, the option chain is where it gets confusing. So try to stick with me here for a little bit. Now, the option chain comes in strike prices, which means what I can sell it for. Because when I say safe, predictable, and consistent, well, a covered call, which just so happens to be the safest trading strategy there is, you buy the stock and you allow someone to buy it from you. So if I buy on a Monday, if I buy the stock on a Monday, and I sell you the option to buy it from me for the exact same price I just paid for it, great. Well, what do I get out of it? You're going to pay me what is called a premium, just for that privilege. Luke! Monday statistical are in the red in the bull market. Do you buy your stocks and options calls late in the day? Nope. Smack dab at the market open on Monday morning. That's it. Smack dab Monday morning. As soon as the market opens, that's when I want to jump in and buy my stock. And I also want to sell the option at the exact same price. We're going to get to that in a couple of seconds. Just sit tight with that question. Now, if I'm buying it at this price right here, the ask price, okay, the bid is what I can sell it for. If I own it and I want to sell it, this is what I'm going to collect, $35.88. If I'm buying it, well, I'm going to pay the ask price, $36.09. Now, these numbers are usually closer when the day when the market is open during the day. It's usually 1, 2, 3 cent spread. The spread is the difference between the bid and the ask. The way you can figure out a spread, your corner drugstore or your corner store. Circle K, Quick Mart, Quick Stop, 7-Eleven. I'm sure you have a store right around the corner somewhere. Okay, so somebody owns that store. Let's call him the market maker. Now the market maker, he's going to buy a gallon of milk. Let's say he pays $3 for it. He's going to sell it to you for $4. What does he make? He makes the spread, the difference between what he pays for it and what he sells it to you for. Okay. I can't read that number. Spot. I'm just calling you Spots. What's happening, Spots? Just showed up. So that's who we're buying from. We're buying from the corner store owner or the market maker. If you think you can sell it to someone else, no, you cannot. This is the price you pay. This is the price you get. Okay, you sell it to one person, you buy it from one person. He sells it to whoever he wants. But you walk into his store, which is whatever trading platform you use, whether it's Thinkorswim, whether it's Charles Schwab, whether it's Fidelity, whether it's Just a Trade, whether it is Robinhood, Acorn, all the same. You get the market maker. That's who you buy from. That's who you sell to. All right. So if I'm buying it for $36.09, the closest strike price, that's these right over here. Okay, 33.5, 34, 34.5, 35, 35.5, 36, 36.5, so on and so forth. They're right here, smack dab in the middle. Now, if I'm buying it at 36, the closest strike price that I can sell for, that's what I like, the closest. You can sell any one you want. You can sell the 34s, you can sell the 38s. I'm going to do the 36s because it's the closest and it gets the highest rate of return. That's what I'm looking for, rate of return on a weekly basis. Now, when I say weekly, look over here in the yellow letters. 1 November. That's this Friday. 8 November. That's next Friday, 15 November. That's 2 Fridays away. 22 November, 3 Fridays away. 29 November, 4 Fridays away. This is probably like one of the only months that has 5 Fridays in it. Okay, is what it is. So if I'm buying it here tomorrow morning and I'm selling this one, this expires in 2 days. See that little number right there? You're not going to get much value out of that. So let's not even look at that one because no value there. We want to go to this one right here, 8 November. That's next Friday. So if I'm buying it at 36.09, I'm going to sell it at 36. Well, I'm losing 9 cents, right? Okay, not a big deal. That 9 cents got to come from somewhere. So if I'm buying it at 36.09, I'm selling it at 36. I'm going to collect $1.36 per share for doing it for whoever buys it from me. Okay, I'm buying it first thing in the morning at this price. I'm selling this. I'm collecting that first thing Monday morning. Why first thing Monday morning? Because Monday morning and the market open is the furthest distance from the opening on Monday morning to the close on Friday afternoon at 3:59. That is the most amount of time you're ever going to get during the week, Monday through Friday. If the options expire on Friday, the most value I'm going to get is Monday. Think of it this way. Monday, you got 5 days. Okay? Tuesday, you got 4 days. Then 3 days. Then 2 days. And then 1 day. So think of it this way. Time value. That's what we're selling. Because 80% of all options expire worthless. If 80% of all options expire worthless, why the hell would I want to buy one? I don't want to be on the 20% side. If odds and probability is going to be on my side, I want to be on the 80% side. Okay? If I sell an option, 80% chance I'm going to make money. If I buy an option, 20% chance I'm going to make money. Granted, you make more money when you buy than when you sell, but that's neither here or there. I want the odds and probabilities in my favor, so I want to sell options. I don't buy options. Most people, when they first start out, they lose money by getting the terminology incorrect. Hitting the wrong button or selling when you should be buying or buying when you should be selling. It's very important to understand the distinctions of going in the indoor, going out the outdoor. Okay, it's like when you go to a store. You don't want to go in the outdoor. It just doesn't work that way. So in the stock market, we want to buy the stock, sell the option. That's what I do. I'm not telling you what to do. I'm just sharing what I do. Okay, I don't give tips. I don't give advice. I just share what I do, and I give you my opinion on the stocks you guys asked me to take a look at. Okay, take the information for what it's worth. It's free. Just do your research. If it sounds good, great. Do some research. The very first question you should always ask yourself, does it make sense? Does it make sense? Okay, well, we're looking at advanced auto parts. Remember rule number 1? Never buy something you don't know or you don't understand. Always go in as if you're going to buy it and hold on to it. Well, advanced auto parts. Okay, 3609 to 3609 is selling for 136. Exactly what kind of rate of return is that? Now, we're going to take a look at the chart in a minute, but I want to tell you, how do you check the rate of return? Well, you get your trusty old calculator out. You take your profit, which is going to be, okay, 136. But remember, if we're buying it at 36.09, we're losing 9 cents. So we get 9 cents is going to come out of that 136. So I'm only walking away with 127. That makes sense? So you take your 136, and we're losing 9 cents, right? So losing 9 cents, 0.09. So I'm walking away with $1.27 profit per share. So if I have 100 shares, that's 127 bucks. If I have 1,000 shares, that's 1,270 bucks per share. And what am I doing? I'm buying it at 36.09 and I'm selling it at 36. I'm actually selling it for less than I paid for it, and I'm still making $1.27 per share. But what rate of return is that? To find out the rate of return, you take your profit and you divide it by what you paid. Paying $36 per share, divided by 36, and it comes to a grand total of 3.5% for 1 week. So what has to happen from there? Let's go on. Currently, okay, this is where we go to the chart. I've got one question over here. Luke, do you have a personal bias on some stocks that have consistent dividends that you refuse to buy? Nope. Now, I have talked to a lot of people. Some people refuse to buy certain companies because of moral reasons. I understand that. I do. Okay? And that's, in my opinion, it's kind of like getting on an airplane and standing at the doorway and questioning the pilot and the co-pilot before you go to your seat. Doesn't make sense. Or if you're riding a bus, do you stop before you get on the bus and you ask the bus driver a whole bunch of different questions before you get on? No. Let the person do their job. Leave them alone. All right. That's why I like 20 years of consistent dividend increases, because a dividend is a portion of the profits. If the profits keep increasing, well, logic, common sense tell you that if the profits keep increasing and a dividend is a portion of the profits, well, the dividends increase. So it works backwards also. If the dividends keep increasing, must mean by logic and reason and common sense, might as well throw that in there too, that the company is consistently profitable, because they can't increase the amount that they pay to their shareholders unless they have the money to do so. They don't have the money to do so unless they're profitable. Luke. Okay, Luke. You have a bias against Ford. Didn't pay their dividend during COVID. I overrated myself and I lost 10. All right, sorry about that, Luke. More creators want to co-host. Okay. I have no idea who you are. Seriously, I don't. So if I knew who you were, I had no problem co-hosting with you, because I would like to have a co-host, because of certain things I just don't know how to do on this platform. All right, I know how to stand in front of the camera and point. That's the easy part. Okay, so let's go back to the chart, because we saw the numbers. The numbers look good. What was it? 3.5%? Okay, 3.5% for the numbers. So if I'm going to buy it at 36.09, sell it at 36, selling it at a loss and still make 3.5% for the week, I want to make sure the timing is right. Okay, so a year ago, 51.09. The top of the year, 88.56. That was in March, the end of March. Okay, she drops right here from 61.76 all the way down to 48. Okay, that's the drop. Now, I like to tell people, stocks go up, stocks go down. When a stock goes up and you don't take your profits, don't be surprised when the market maker opens up one day and drops the price 15 or 20 bucks. Okay, it's not a profit until you take it. And if you don't take your profit, you are susceptible of this crap. This is called a black swan. They jump in from nowhere. You don't see black swans that often, but when they come, it's like, whoa, that big drop. Yeah, whoa, what the fuck? All right, anyway. So she drops, she keeps going down, all the way down to, what is that, 37? But that's not the bottom. Damn it. Ginger tea with honey. It helps get rid of that cough. Anyway, let's keep on going. Whew, good, all right. So she kept dropping, and look what happened. Up, down, up, down, up, down, up, down, up, down. Look at this. A new bottom today. So today is the bottom of the year with Advanced Auto Parts. Now, I do have some Advanced Auto Parts. This was a surprise to me. Okay, so anyway, let's take a look at the last 30 days. Now, the reason I want to look at the last 30 days, because it gives me an idea of where the stock is going next. Just an idea, nothing concrete, because we are all creatures of habit. We all have a tendency to do the same thing, just, different orders. Okay, so You got a high here at 41, drops down to 30, 36, back up, back down, back up. Here's a high right here, 41.50. That's the high of the 30-day period. Drops up, back down. Today is the new 30-day bottom. I love a 30-day bottom, but how do we know it's a 30-day bottom? Well, we don't know, because currently right now, this is the bottom. Tomorrow, it could be lower. Okay? Thursday. Wait a minute, is today Wednesday? Yeah, today's Wednesday, isn't it? Yeah, holy shit, today's Wednesday. All right, so tomorrow's Thursday. So tomorrow could be lower. It could be. Okay, so I don't buy until there's 2 days to the upside from a 30-day bottom. 30-day top, 30-day bottom. 2 days the upside, that's where I will jump in. You guys got to figure out for yourselves what makes sense to you. Okay, number one, do you like the company? That sounds like a stupid question to ask, but it should be the very first question that you ask. Do I like Advanced Auto Parts? Do I know what they do? Do I have a good feeling that they're going to be here for the next 10, 15, 20 years? These are valid questions. It's not as if Advanced Auto Parts is only one store and it's right down the street. No, there's a whole bunch of these stores nationwide. To be totally honest with you, I don't know how many stores there are. All right. Now, the next chart I want to look at is most likely my deciding factor, and that is called the seasonality chart. Now, for those of you new here and don't know what a seasonality chart is, well, it is basically what it sounds like. It gives you the whole year. Okay, all the way to the left, January 1st, all the way to the right, December 31st. The blue line represents the movement for this year. The blue dot right here, well, that's today. Okay, the red line right here, that represents 10 years of data. That's 2014, 2015, 2016, 17, 18, 19, all the way up until last year. 10 years. What is the average movement this time of year? Well, that would be right here. Look at it. Okay, we're going to zoom into that to get a better look. So I take my cursor, put it right on the blue dot because that's today. Left click, drag, right, there it goes. So here we are right here. Line those up. And look, a nice steady upward trend all the way until here, which is the second week of November. Well, great. We're in the last week of October, so I got 2 weeks to jump in and grab my 1% because I just want 1%. And when it comes up again, great, I'll do it again. All right, so that being said, let's go back to where we were. And let's actually do a trade because I tell you, I don't hide anything. I'm going to show you actually how to do it. Not that I would do this one. I'm just going to show you the mechanics on how it works. So first off, I want to get rid of the chart because I already know I like the 36s. Right, and I want to change this right here where it says single spread. Okay, right there. I'm going to click on that, and I'm going to come down to covered stock. Now, these all here are all different trading strategies. I only teach one because it's simple, it's safe, it's predictable, and it's consistent. I had to find something safe for my 9-year-old daughter, so this was it, the covered stock. Okay, so I hit on that. Okay, and I told you I like the 36s. 36s are right here. That little icon, when you put your cursor right on top of that, it says buy. I want to buy a covered call. Okay? Most people make a mistake by hitting the wrong button. And I always tell people, when you're first starting out, use a paper trading account. It allows you to make as many mistakes as you need to in order to learn what you need to learn. What are you losing? You're losing a little bit of time. But here's the thing. Give a man a fish, he'll eat for a day. Teach a man a fish, he'll eat for a lifetime. Well, I'm teaching you how to fish. It's not instantaneous. I don't just hand you the pole and say, there you go. No, it's a little bit more to it than that. Okay? You got to know the right bait. You got to know the right spot. You got to know the right jiggle. Because there's a lot more to it. All right, so, but the basics are there. Okay, if I teach you how to do it and walk you through it, Great. Well, keep doing it until you get good at it. Now, I've seen many students over the years. They'll get good at it, and they'll get good at it, and they'll get really good at it. And they say, James, when am I supposed to do real money? You will know. Seriously, you will know when it's time to take your training wheels off. Okay? Because there will be a little gnawing in the back of your head saying, we got this. Let's throw some real money in it. And it will gnaw at you until you say, you know what? I'm ready. Let's do it. And then you put real money on the line. And you do a little bit at a time. Okay, I have 98% of all of my money invested at all times. Well, I don't suggest you doing it. I've been doing it for 20 years. I know what's going on. I look at my account twice a day. Once in the morning with my morning trading group and once at night with you guys. So I have a good indication where my positions are. All right, that being said, let's keep on keeping on. So here's the trade right here where I'm buying the stock and I'm selling the option. Now I'm going to change it to do just one contract, which is a 100 shares. That way you don't freak out when you see exactly how much it's going to cost to buy 1,000 shares. You know, 100 shares is one thing. 1,000 is a different story. Okay, I like doing it the market order because it fills instantaneously. Okay, now the option and the stock are linked together when you do it this way. So when I say predictable, I want to hit the confirm and send button. Here we go. Look, this is the order before it is sent. Now I always encourage people to read it out loud so you hear what it is you're doing. So if I buy one covered call of AAP, that's Advanced Auto Parts, 100s, those are the weeklies. Okay, 8 November 24. That's next Friday. That means the option that I am selling, whoever buys it, okay? Now, it's a market order, so it'll be filled instantaneous. Do we know who buys it? Nope, we never know. Do we care? No, not really. Because it might be the guy next to you. It might be someone in Hong Kong. It might be someone in Chicago. It might be someone in Michigan. It might be someone in Boston. It might be someone in Hawaii. We don't know. Okay, their money is just as green as anyone else's because you can't get onto the dance floor without a pass. Your pass is opening up a trading account with funds available and being approved for the trading. All right, so you can't just at 6 years old you can't come in and open up a trading account. 12 years old you can't. You got to be at least 18 to open up a trading account. Then you got to fund it, and then you got to be approved for options. So once you're set up and ready to go, great. So read it out loud. Hear what it is to make sure it sounds right because your eyes can play tricks on you. That might be something that you miss. You might hit a wrong button. So here's what it sounds like. Buy one covered call, Advanced Auto Parts, 100s, those are the weeklies, 8 November 24. It expires next Friday. Come on, what question you got there? It doesn't want to open up. Who is it? Luke. Can you trade options with a cash account? It doesn't have to be margin. No. Actually, Luke, that's a great question. He wants to know, can you trade options in an all-cash account? Well, I insist when you start to use all cash. Do not use a margin account until you understand what the risks associated with a margin account is. Because it sounds good. You make more money, but you also lose twice as fast. So never do margin until you really know what it is you're doing. All right, so November 8th, we already said that. That's next Friday. The 36 call option, we already decided that's what we like because this is the purchase price right here. AAP at the market to open. All right, great. Now, very next line down, it says break even stock price. If the stock goes down to 34.56, that's the break even. What does that mean? Well, as long as the stock stays above 34.56, I have some type of a profit. Well, it's currently at 36.09, and we already identified, well, this one's not the case, but we already identified we don't jump in until it goes up. Trevor, how are you doing? All right. That being said, take a look at the profit for this one trade. Remember I said consistent and predictable? I know what I'm going to make before I even do the trade. I don't buy a stock and wait for it to go up and think, oh, what am I going to make? What am I going to... No, I'm 60, I'm retired, I don't work anymore. I need to have a safe, secure, predictable income. Because we're the only species on the planet that got to pay to live here. Okay, however much money you think I have, I don't. I have enough to keep myself comfortable. That's it. But I do make 1% on average every single week. What does your shirt mean? Trevor, what it means is when I come up to a stock that just doesn't fit, that's a no. Okay, and if it's a really bad stock, I mean really bad, I always say, what the hell are you thinking? Seriously, think about it. If you're talking about your own personal money and you put it into a dog and it just goes to hell, what the hell were you thinking in the first place? Never invest your money into something you don't understand. If you don't understand it, don't buy it. Unless it's money that you can throw away. Okay. So that being said, here's the profit right here. Remember I say consistent, predictable, okay, all that kind of nice, neat, fun stuff. The profit for this one trade, one contract, is $143.50. Well, great. What does that mean? Well, it doesn't mean anything. Well, let's connect the dots. So, bring up my calculator. $143.50, which is the profit. And what is it going to cost me to make that $143? It's going to cost me $3,457. $3,457, and that's going to give me a grand total of 4.1% for the week. Well, that's crazy. 4.1% for the week. Did I do that right? Okay, it's what it is. 4.1% for the week. I mean, for this week and next week, because it expires next Friday. So the question is, does it make sense? If I'm buying it at 36.09 and I'm selling it at 36, I'm walking away at 4.1%. If the stock stays exactly where it is, because right now it's at 36.09. It can actually come down a little bit. As long as she closes Friday afternoon, next Friday, above 36, I'm going to make 4.1%. Now, how long does this usually take? It doesn't take long at all. So let's get out of here. 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 Let's go back into here. Now, let me show you quickly how fast this should be. Because once you understand it, it's actually 1 + 2 = 3. It's really that simple. Now, first and foremost, this is going to be the most challenging thing for anyone to figure out. Out of the 9,724 stocks there are, which ones do you like? That's a tough one. Me, it's 20 years of increased dividends. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's 300 companies. 300 or more, somewhere in that area. Ginger tea and lemon, good for my throat, helps me stop coughing. All right. That being said, first and foremost, make your list. Check it twice. See who's naughty, see who's nice. Anyway, once you figure out what stocks, Dividend Kings, Dividend... Okay, wait a second. Wait. Here we go. Dividend Kings. There you go. Dividend Kings, AbbVie, Abbott Labs, Hormel, Colgate-Palmolive, Procter & Gamble, Lowe's are paying dividends this month. Okay, great. All right, so let's take a look at them. AbbVie. Once you figure out the stocks you like and you put into a calendar, then it's actually this simple. We'll go trade AbbVie, ABBV, there we go. First thing, high, a low, where was it, where is it, what's the direction, up, down, up. Okay, this is going to be a flat out no. We're not even going to go any further with this one. Look at that big ass jump today. What do you think's coming tomorrow? Think about it, seriously. If you bought it here, anytime here, between 188 and 196, and it jumped up to 202 today, look at the big jump from 192 to 202. It's not a huge, but it is a profitable scenario, which means more than likely this thing should be coming down tomorrow. Should be. Is it guaranteed? No. Nothing's guaranteed except for taxes and death and taxes. Okay, so that being said, I wouldn't do this one. So, nope. That's a no. Let's go to the next one. Abbott Labs. ABT. Ooh, this one looks good. High, low, was, is, direction, up, down, up. Cool beans. 115.90. The 116s are going for 150. Anyone can figure out that's over 1%. Great. Now I take a close look at the chart. A year ago was the bottom, 91. Top was back in end of February at 121.64. She went down, she went back up again the last 90 days. That's the last 3 months. Look at this. High, low, was, is, up, down, not good, but let's keep on moving. Oh, Facebook just went offline. Don't ask me why. Let's try it again. Facebook, loading. We'll see what happens. Okay, so as I was saying, then we want to jump in to take a look at the last 30 days, because the last 30 days gives me an idea where it's going to move. So last 30 days. Okay. Again, high, low, was, is. Okay. Sideways, up, down. Okay, that's going to be a no, because look where it is. It's actually making a new low. See, I don't want to buy there. I want to buy as she turns around, goes back up. So that's a no. Next, Hormel. HRL. Great. High, low, was, is, down, up, down. Again, no. Not even going to bother looking, because take a look. Okay? This is one we will put on our list to take a look at sometime during next week, because as soon as it finds its bottom, turns around, goes back up. Hormel's been in business for over 100 years. They are a dividend king. They've increased their dividends for over 5 decades. It's basically a no-brainer if this didn't look like this. But it does. So we're going to put it off until next week, because next week it might be a better choice. Okay, so back to the next one. Colgate-Palmolive, CL. CL, here we go. Simple, easy, breezy, high, low, was, is, direction, up, down. Another no. Look at this, another bottom. 30-day bottom. Look at that. 30-day high, 30 days ago, 30-day bottom today. Again, we'll be looking at that one during the week, waiting for it to find the bottom and turn around and go back up. It always does. So look, here's the high, it went down, here's the bottom, and it decided going up, gets to a certain point, back down. Now we're looking for that bottom for it to turn around. Okay, so Colgate-Palmolive's a no. Next one is Procter & Gamble. Same thing. Jeez. Almost the exact same thing. Look, the new 30-day bottom. So that's all the dividend kings have a 30-day bottom this week. That's weird. So that's the dividend kings list. Well, from there, we go to the next best list. The next best list is the dividend aristocrats. ABM. Uh-oh. Archer Daniels. No, that's ADM. What the heck is ABM? ABM. I don't know. ABM Industries. Okay. AbbVie. Okay, yep. Colgate, but Lowe's. Okay, so Lowe's is see, these are all dividend kings and dividend aristocrats. Lowe's is a dividend aristocrat and a dividend king. How come that didn't show up before? That's weird. But anyway, let's take a quick look at Lowe's. Why the hell not? LOW. Again, holy shit. High, low, was, is, up, down, 261.99 to 262 is going for $4, well over 1%. That's a yes, but again, same thing. Hitting that 30-day bottom. Look at it. Okay? Up, down, we're looking for a new bottom. Look at this. 1 gap down, 2 gap downs. Those are going to fill. Those look awesome. Because this, as soon as it finds the bottom, goes back up, it's going to fill that, it's going to fill that. So we're looking somewhere in the 280 area as soon as she turns. Okay, it's really not that difficult to read. Okay, here's your high. Here's your low. What's the direction? Up, down, up, down. Okay, gap here and a gap here. Really not that difficult. Okay, adults have a tendency to make it more complicated than it needs to be. Apparently, I'm having issues with Facebook. Loading. Okay. So anyway, there's your steps. Step number 1, find your stocks. Step number 2, put them into a calendar. Step number 3, take a look at the chart. Take a look at the numbers. If everything looks good, great. Do the trade. Make sure the numbers look good. But always, always, always question number 1. Does it make sense? Question number 2, do I like this company? Well, it's Lowe's. Okay, what is it about Lowe's that I don't like? I love Lowe's. I go to Lowe's once a week. And I go to Home Depot once a week. Sometimes 2 or 3 times a week. All right, so we looked at ADAP. We're going to take, holy shit, I got more than 100 questions. All right, let's start taking a look at some questions. Old dog, we're going to take a look at Dollar General first, and then we're just going to say no. Look, the exact same thing. Bottom today. Okay, so we put it on the list, and we wait for it to turn around to go back up again. No sense even looking at the numbers, because it's pointless, because it's going to be a no, because it's at a 30-day bottom. Okay, now we don't know if tomorrow is going to be lower, so we just sit back and we wait and we watch. Now, I don't want you guys thinking I ignore your questions. I just wanted to get through all that rambling. I got to do that once a week to make everybody happy. Now, let's take a look at some of these questions. I have over 100 questions, holy shit, or 100 notifications. Oh, let's go all the way back. Silver Wolf, back again, dude. I must be doing something right if you keep coming back. All right, here we go, 5,200. Wow. All right, let's keep on rolling. Keep on. Let's keep on keeping on. Got to make the best of. Okay. I was messaging you today, or was it a fake? Adam, believe it or not, Adam, I do watch my TikTok, what do you call it? I check my TikTok messages 3 times a day. Because believe it or not, TikTok, well actually Twitter is my newest one, because what's his name took it over. But I've been on YouTube for over 10 years. Twitter for only 2 or 3 years. But TikTok for about 2 years. But TikTok's numbers far surpass all the other social media sites. And I have no idea why that is. You know, I should put up a couple of videos and just, boom, everybody wants to know. But not on YouTube. Not on Facebook. Not on Instagram. Not on Twitter. I check it 3 times a day. So, no, you weren't talking to me, Adam. Adam Dwayne Wade. Now, I remember talking to you last night, because last night you made comments. Today, no. Like I told you, there's 28 to 29 people pretending to be me. All right? But so, no, you weren't talking to me. So, if you want to talk to me, send me your number. I'll give you a buzz. Okay, more questions. Southern Company. Oh, is that SO? SO, that's going to be a no also, for 2 reasons. Reason number 1, look how close the high is. Reason number 2, it's in a free fall at the moment. Okay? We'll keep an eye on it, and as soon as it makes the bottom. See the bottom here? See the bottom there? Okay, stocks go down, find a bottom, and then it starts going up. Finds a bottom, 2 days to the upside, starts going up. 2 days to the upside, starts going up. Okay, so look, she's falling. As soon as she finds the bottom, turns around. For me, it's 2 days to the upside before I jump in. Okay? Eddie, Cool Hand Mook. Really? What we have here is a failure to communicate. High, low, low, high, anchor drop. Okay, I have no idea what that means, but alrighty. I'll play along. Alright, wow, these are all just people who join. What application is that you use? Mark, this is Think or Swim. Okay, it is owned by Charles Schwab. Okay, so if you want to use it, you can download it for free onto your computer or your laptop. But from there, you really got to call Charles Schwab and say, hey, I'm using your shit. Is that okay? As long as you don't piss them off, they let you use it for a month or 2 before they like you to, move some money over to there. I always tell people, if you don't want to use it, put in 5, 10, 15, $50, $100, put it into there. let it sit, do a couple of trades with that, you know, because the software itself is freaking awesome. Anything and everything you can possibly imagine there. So I just like it. Anyway, you know, do your own research. If you like it, great, use it. If you don't like it, hey, you know, there's a lot of trading platforms out there. Okay, so let's keep on going. Oh, Mike Gilchrist, do you think it has much to do with the election coming up and people kind of holding off to see the outcome? You know, that makes sense. It really does. ABM doesn't have weekly options. Okay, then. Andrea. Uh-oh. Andrea has a whole bunch for me to take a look at. BP, NEW, Intel, KSS all dropped today. Alrighty then. We'll see how it plays out tomorrow and the next day for the next couple of days. So when will you buy it? All right, Jones Brothers, I'm terribly sorry, dude, but there's over 100 questions here. Okay, I have no idea which one you're talking about. I sent you my number. Please call me. Martha, do you want me to call you tonight or would you prefer it to be tomorrow? Because I'm going to be up to 1 or 2. All right, and I have no problem whatsoever. You know, get it done, get it out of the way while everything's still fresh in your mind. Okay? Now she pinned her question. Say, if you have a question, you really want me to get to it, pin it. It's right on my screen. I can't ignore it. All right, let's keep on going. Felix, my Q, I bought some Pfizer today. Cool beans. I like Pfizer. Tomorrow is best. All right, Martha, tomorrow I'll give you a buzz. I really appreciate the steps. And Stacy, I really appreciate the steps and examples. Well, that's what we're here for. Uh-oh. They can say what they want about TikTok. I like it. I like it too. See, what the establishment doesn't like about TikTok, okay? It's not the dancing kids. It's not the conspiracy theories, okay? It's the actual being caught in a lie and having it broadcast to everybody. I love it when the senators actually get the congressional hearings and they record them and they post them online. And then you ask someone like Alejandro Mayorkas, it's like, what do you mean the border is safe? All these people walking right through. What the hell do you mean nobody's walking through? And it's like they'll go straight to them and face facts, and they lie right to the face. That's what they don't want us to say. They don't want to be seen lying in public and then everyone else seeing it, because the headline news won't put it on. Okay? I saw something very disturbing. I think it was Mariah Carey or some famous singer was singing the national anthem, and she missed a couple of words and off a couple of notes. Okay? Somebody went in and changed history. You cannot find that because they erased it. Did it not happen? No, it fucking happened. Millions of people watched it. Millions of people seen it. But from this day forward, whenever they changed it, you cannot see the mistake. That's changing history. That is an out and out lie. Anyway, don't get me started. Okay, Felix, sweet. I'm thinking it's a good play at this point. Never buy something unless you understand it. Okay, Martha, tomorrow morning I will. UFO now. What's up? All right, let's keep on going. All right, Martha. Hi, I have shared my number. Please call me. I would like to join the morning group. Cool. Peyton, can you please explain option? Uh-oh, it just disappeared. I hate when that happens. Okay, all right. Peyton, can you please explain options and how they work? Peyton, I thought I already did. Okay, let's take a look at, well, we have Southern Company. Why not just name Southern Comfort? Everybody knows Southern Comfort. Southern Company? What the hell is that all about? All right, anyway, Southern Company. Currently, the purchase price is $91.71. That is the price of the stock. The option is totally separate. Okay? Think of it this way. Oh, someone explained it to me. Now, don't take this personally, but it's kind of like a female thing. They call it female math. Are you ready? Here's how an option works. It's kind of like female math. You buy a nice dress or a nice pair of shoes. You leave the price tag on it. You wear it a day or two, and then you bring it back to the store and get your money back. Guys will understand that. You ever go into a woman's closet and see all these dresses with the price tag still on? Yeah, they wear them. Okay, and then they bring them back. Same thing. Okay, you're buying the stock at 91.71. You're selling it to someone else. You're collecting the premium. Now, you're selling the right, not the obligation. Or you can look at it this way. If you have an old car sitting in the front yard and you slap a for sale sign on it, let's say $1,000, $2,000, whatever, and Ted from down the street comes by, hey, I like your car. Let me give you $100. Hold it for me until Friday. Why do I say Friday? Because every Friday the options expire. Okay, so if he comes back Friday, he gives you cash. If he doesn't come back, you can sell it to somebody else the next week. Same thing. Okay, it gives you the right, not the obligation. Now that's the call option. You have the call options on this side, the put options on this side. Now I don't explain put options here at all. That's something totally different. Okay, when I say I created it for my 9-year-old, it had to be simple, safe, predictable, consistent, no way to lose. Okay, once you get into put options, it gets confusing. Okay, there's some adults that don't understand the put options. It gets confusing. The call's easy. Think of it this way. Here's another way of looking at it. So this is my third metaphor I'm giving you. All right. Now I'm pretty sure most of us can relate to this. Okay, you're at a party or you're at a friend's house or somebody in the house says, "Yo, I'm going to the store. Anybody need something?" Okay, yeah, pick me up a box of tissue paper or some milk or a Pepsi or 6-pack, whatever. Great. Go to the store, pick it up. You come back, they give you the money for that, and then they give you a little tip or a little bit of gas money, whatever. That's the premium. Okay? I'm running to the store, pick me up a 6. Great. There's a 20. Keep the change. That is the option. Okay? Something like that. It's maybe oversimplified. The metaphor may be a little too deep, but that's basically what it is. Let's keep on keeping on. So your strategy needs 50 grand available per week to invest. Bruce, I did not say that. Okay, Bruce, my grandson, who's 4 years old, he has a trading account. He started out with $50. Okay, the strategy is called Dividend Capturing 2.0. It concentrates on the dividend and the fact that the dividend stocks have a tendency to increase before the dividend date. So there are a lot of factors in there. If you know when a stock is moving up, you have a lot of opportunities. You can just buy the stock and collect the run up. You can buy the stock, sell an option. That's a covered call. You can do a spread. You can buy this option, sell that option. That's a spread. You can do a calendar spread. You can buy an option way out and sell the one here. You can do a back ratio spread. There's a lot of information. The biggest thing I have going for me is the fact that stocks have a tendency to increase in value coming up to the dividend date. The dividend dates are highlighted in the little green dots. Now, those are only a couple, but see all those? Okay, now, it doesn't look like there's any there, but there's too many to list. There's 135 companies paying a dividend on the 30th of September. 29 paying on the 1st of October. 4, 7, 9, 12. There's 12 on the 2nd. 8 on the 3rd. 25 on the 4th. 19, 26, 24, 23, 27, 44, 18. There's a whole bunch of companies every single day paying a dividend. Now, if you really wanted to get technical, you could actually go into the data stream. Uh-oh, I don't have it open. Yahoo Finance. Okay, we're going to go into the data stream. I'll show you what the data stream looks like. Okay, over on Yahoo Finance, over on the left-hand corner, I'm looking at historical data. Okay, do you see what you're looking at right here? Okay, the dates, October 30th, October 29th, 28th, 25th, 24th, 23rd, 22nd, 21, 18, 17, 16, so on and so forth. First column, open of the day. Second column, high of the day. Third column, low of the day. Fourth column, uh, um, close of the day, adjusted close, volume. This is the data stream. You can go all the way back until the 1980s. Okay, but look at right there. That is the dividend. All right? Now, that is the dividend. That is the dividend date. Count back 10 days. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, on August 2nd, 2024, the stock opened up at 412.49. Okay, the high of the day was 415. Okay, it went up. Okay, high here. Look at 421 before the dividend. 417 before the dividend. The stock has a tendency to go up before the dividend is paid. You don't like that one? I'm going down a little bit further. Oh, here it is. Here's another dividend right there. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 397. Well, 399, 407, 413, 413. The stock went up before the dividend was paid. Okay? Stocks have a tendency to increase in value before the dividend is paid. By knowing that information, that's only one piece of the puzzle. Okay? What you do with that information, that is huge. Okay? I like simple, safe, predictable, consistent, and no way to lose. The only way I could figure that out for my 9-year-old was the covered call. Buy the stock, make sure it's a good company. Well, that's too many companies to look at. Okay? Now, there's 9,700 and change companies. Half of them, 4,500, pay dividends. The other half take all the profits, put it back into the company for growth. If you're here looking for growth, you're in the wrong place. I appreciate you being here. I appreciate your communication and your interaction. I really do. But if you're looking for appreciation, you're in the wrong place. I'm looking for a safe, predictable, consistent 1% per week. The strategy I'm sharing with you gets about 1% a week. That's 50% per year. If that sounds good to you, well, you got to put some effort into it. You got to find the stocks that you like. You got to find and just follow it. I'm giving you everything you need. You do not need me after this. Okay, you could do it yourself. But a lot of people keep coming back because they want that reassurance. They want that hand-holding. That's what the morning trading group is for. People join the morning trading group for a couple of months, then they leave. They get it and they leave. Cool. Okay, look at Bama Redneck started out with 7,500. Cool. All right, yeah, so you don't need a whole bunch. I started out with 12 grand back in the 1990s. All right, I lost a shitload, I made a shitload. Bruce, 86. Oh, winner 86. Bruce, no, you would need enough to cover 100 shares of stock in order to sell a call. Okay, great. What's up, bud? Larissa, back again. Say you own AAP at 41. Would you sell the 36s and then roll forward, take a lower premium? Larissa, it always comes back to the numbers. So let's pull up AAP. Okay, so you say you jumped in at 41. Okay, 41 is right there. Okay, so it's currently at 35.95. Let's get rid of this. It's currently at 35.95. Okay? What was the question? Uh-oh, Larissa's question disappeared. Damn. Sorry, Larissa, I was looking for your question and it disappeared. Well, when did you start full-time? When did I start full-time? I don't do anything full-time, brother. Okay. Thank you, Larissa. At 41, would I sell the 36s? No, I would not sell the 36s. Why? Because it's at 35.95. Okay, I would like to go 2 to 3 strikes out of the money to stay on the safe side. Okay, so at the 37s are going for 87 cents. That's way over 1%. Even the 38s are going for 58 cents. Okay, that's well over 1%. Always look at the numbers. Well, that's how far out can we go. 14 strikes. Okay, take a look at the 39. Okay, the 39 is selling for 36 cents. That's 1% of your purchase price. So if you bought it at 36, no, wait a minute, you bought it at 41, okay? And you sold the 39, so 39 is way up here. Okay? You got it at 41. It's currently at 36. The 39s right here are paying 36, and 36 is 1%. So wait, sorry. No, the 38.50s, sorry. The 38.50, because remember, you bought it at 41. So the 38.50s right here is still your 1%. But look at the space between the bottom here and here. Okay? Can it hit that? Yes, it can. Will it? Maybe, maybe not. But here's the thing. We're here twice a day, in the morning and in the evening. So I seriously doubt it's going to be 38, 39, 40, 41 tomorrow or the next day, because it just doesn't look that way. Kerry Dills, what are you talking about when you say strikes? Ooh, Kerry Dills, smack dab in the middle. Okay? See where it says EXP? That's expiration. That's the date, see? 8 November 24. Strikes, I'm looking at 14 of them. If I want to look at 4 of them, well, there's 4 of them. If I want to look at all of them, well, that's all of them. Okay, I don't want to look at all of them. That's way too many. So I only want to look at like 12. Okay. So the strike price is what you can sell or buy a call at. Now, for any contract to be valid, you have to have 4 items. Okay? Starting date, ending date, consideration, and meeting of the minds. That's the 4th one. That's a tough one. Starting date, that's easy. Whenever you exchange money, consideration. Whenever you change, I bumped its head on the 182, so I took a profit and run. Cool beans. So 4 things. Consideration, that's the money, what you're paying. Okay, meeting of the minds, that's the toughest one. Okay, that means you and the other person agree. Okay, you're selling the right. When you sell a covered call, you are selling the right for someone to buy a stock from you at a predetermined price, by a predetermined date. Okay, consideration, beginning, close, and meeting of the minds. That's what you need. Okay, so an option, you're just selling somebody the right to buy it from you. It's kind of like layaway. Okay, hey, I like this, great. Some money, hold it for me. Same thing. All right, I seem to miss a bunch of questions. Uh-oh, I did. I missed a bunch of questions. Okay, I did that. I did those. Strategy, yep, we did that. Larissa, yep, we did that. So, Larissa, hopefully that made sense. Put on your red hat. Bow base, you know, I do have a red hat, but, you know, the funny thing is, I have no qualms about what my desires are. I just don't keep them to I keep them to myself, only because I don't want to have to deal with idiots. Seriously, okay? My children are Democrats. My mother's a Democrat, okay? I can't have conversations with them about adult stuff. So I have to limit my conversations, okay? My significant other is a Democrat. I can't talk to her about certain things either, because they have a refusal to see logic, reason, facts, photos, video. They think it's made up. I prefer not to waste my time on those kind of people. So I keep my opinions to myself as I'm speaking to a couple of hundred people. Let me go back. All right. Julian, James, what happens at expiration if the stock price hits the strike price but is less than the strike price plus premium? All right, Julian, the premium, you need to take the premium out of the equation. The premium is only your consideration for doing the deal. Okay? Think of it this way. You're going to show up someplace, but you can't make it because you need gas money. Well, someone gives you gas money, now you show up. Gas money is totally irrelevant to the deal. Okay, so the strike price, if 36.09, if I sell the 36s that expire on the 8th of November, if at 3:59 on November 8th, if the stock price is 36.01, okay, then whoever bought that option will take it away from me, or the market maker will take it. So Monday morning, I will have all my money back again. Okay, the premium is totally separate. Okay, you get that the instant you sell the option. That's why I do it on a Monday. I buy my stocks on a Monday, I sell the options on a Monday, I get my cash on a Monday. Then Monday night, I pay all my freaking bills. Anyway, so if 3:59 Friday afternoon on the 8th, if it is above 36, Monday I will no longer have it. If it is below 36, 35.50, 35.99, then I will keep the premium and I will keep the stock, and then Monday I will do it all over again. Okay, so the premium, the strike price, and the stock price are always separated. So Larissa made it. I would look at the 20 Delta, the upside down, and yeah. Okay, Bama Redneck, with new people, don't talk about Delta. I understand Delta. You understand Delta. A lot of people understand Delta. But for newbies, yeah, once you start talking about the Greeks, it gets confusing. You know, you understand it, I understand it. Great. But does she understand it? And when you're trying to teach someone the basics, simple, safe, predictable, consistent, once you start throwing in the delta, the gamma, the theta, and the decay, and all that kind of nice, neat, fun shit, it gets confusing. And then they just clam up and walk away. Jones Brothers, when did I start trading full-time? I don't trade full-time. Okay, I trade my own personal account, 15, 20 minutes a day. That's it. All right, think of it this way. Ah, shit. They keep moving on me. Okay, where was I? Okay, these questions keep on moving if I don't keep after them. All right, what happened? We did that one. Larissa, we did that one. When did I start trading full-time? I don't trade full-time, okay? Now, when I say I have 6 accounts and I share 3 of them with you guys, take a look at account number 1. Okay? Account number 1 at this moment in time is up over 82% so far this year. Okay? Do I always do that good? No. Last year I think I only made 40%. I got 3 big losses last year. Okay, so the current balance is $168,000. 1% of $168,000 is what? $1,600, $1,700 a week? Now, if I'm doing 10 to 15 minutes a day, okay, that's all I spend on my personal account. That's an hour a week. An hour a week to make $1,600 to $1,700. That's freaking crazy if you think about it. Because I don't really need to be in front of my computer longer. As a matter of fact, I prefer not to be in front of my computer. Okay, I jump on my computer at 8 o'clock in the morning. I send out a link to everybody in the trading group so they can be at the meeting at 9. I walk away from my computer and then I sit back in front of it at 9. And then I'm on from 9 until whenever you guys stop asking questions. Lately, it's going from 11:30 to 12. I mean, you guys are really putting me through it. But that's besides the point. That's what I'm here for. Okay? 86. I'm good. Made money on Google calls. Cool beans. When do I... Okay, I don't do trade time. All right. Nicely done. Yes. Love girl math. Peyton, would you believe how many women actually get it when I say that? You buy a nice pair of shoes. You wear them for a day or two, you bring them back with the sales tag on them, and you get your money back. But you got to use them, and you got your picture taken. Everybody says, ooh, they look, yeah, that is your premium, honey. Okay, Bruce, is account enough to buy 1,000 shares of a king? Yeah, Bruce, I get it. I sold at almost the top 180, 190, and then it crashed. Was going to hold for a synthetic, but no premium. Okay, I got it. Bruce, yes, Dividend King stock, 100 shares, let you buy 1 sell covered call. Yep. Teach us your ways. Damn. Okay. You have decided aristocrats. You have the Dividend aristocrats, Dividend contenders, and Dividend champions. And you also got Warren Buffett's list. Maybe that's why certain dividend stocks don't move. Well, Mike, it depends. You really have to ask yourself the question, why are you investing in the first place? And don't just say to make money, okay? We all know that. Okay, what is your goal? Are you looking for cash accumulation, or are you looking for a stock appreciation? Because there's a huge difference between the two totally different strategies. Okay, with what do you call it? Stock appreciation. That's where they take all the profits, put it back into the company, and the stock price goes up faster. Yeah, it's great when you're younger. Okay, when you're retired and you're living on a fixed income. Well, my fixed income is 1% of my total trading portfolio. Gotta get those words out. Okay, Stacy, what happens on Friday when it sells and when it doesn't? Well, interesting thing, Stacy. Remember rule number 1? Never buy a stock you don't want to own or don't understand. Okay? If you like the stock, so AAP, Advanced Auto Parts, don't look at the numbers. Don't look at the rate of returns. Okay? Think old school. I'm going to buy a stock, I'm going to hold it for 20, 30 years and collect the dividends. That's what most people do. This strategy here, totally against everything you've ever heard, ever learned. Nobody invests for weekly cash flow consistently and predictably. They all buy for annual percentage rates. Oh, that company's paying an 8% yield. That does nothing for me. I would still be working if I'm only collecting 8% for the year. No, it doesn't work for me. So, if you buy a stock, 3609, Friday, if it's below 36, you keep the stock, you keep the premium, and then you sell next week's. Well, what's next week's going for? Well, next week's 36 is going for 345. Now, these numbers will change during the week because as the time ticks away, tick tock, yeah, these numbers decrease. As the stocks go up and down, these numbers increase and decrease. Okay? To come up with these numbers here, they have what is called the Black-Scholes options method pricing off. It's a freaking complicated. It looks like something Einstein came up with. It's a huge mathematical equation, and it takes into effect implied volatility, stock price, date of expiration, today's date, in interest, vega, delta, gamma, theta, all that weird shit. Throws it all together, and it comes up with the price for however they came up with it. Fine, that's how they come up with it. What does it mean to me? It means absolutely nothing. Okay? It means absolutely nothing to me. 3609, what's 1% of 3609? It's 36 cents per share. 100 shares, that's 36 bucks. 1,000 shares, that's 360. 10,000 shares, that's 3,600. It's always the same. It's a mathematical equation. Am I getting 1% or am I not? Okay? $36, 1% of $36 is 36 cents. Well, the 36 is going for 136. That is over 3%, close to 4. 40 times 3. Yeah, it's right around 3%, over 3%. Okay? That's what happens on a Friday when it goes up and when it doesn't go up. If it's over 36, I'm back into 100% cash the following Monday. If it's below 36, I keep my premium, the 136, and then I get to sell it again on the following Monday. But the following Monday, all these numbers are going to change. Bama Redneck, hold that thought. I just believe Google. I passed on Meta and Microsoft. I have Amazon for tomorrow. Cool beans. I think Apple will miss. Now, I actually have some Apple, so let's take a look at Apple. AAPL. No. AAPL. There we go. Now, I actually have some Apple at 230. Okay, here's my position right here. All right. Now, currently, down, up, down, up, down, up, down. It's coming down now. Okay, fine. Okay. Constantly selling covered calls which expire worthless to a buyer constantly. Yeah, Mike, that's the way it goes. That's part of the game. So if you're buying a stock, what do stocks do? Well, stocks go up, stocks go down. Devon, hello. What assets do you suggest to trade options on that correlate with oil? ETFs have low liquidity. Devin, that's an interesting question. It's a great question, actually. Better questions you ask, better answers you get. Okay? I don't isolate anything by industry or by commodity or by what sector they're in. Okay, I do all my calculations by the calendar, by when they pay their dividends. The only thing I do here is dividend capturing 2.0. That's where I look at dividend stocks that have consistently increased their dividends, have a dividend coming up that allows me to jump in, grab a safe, predictable, consistent 1% per week, and then move on. Elminx, how are you doing? Montreal, how are you doing? Hi, over there. Okay, so let's keep on keeping on. Jay, can you show a setup where you would take entry after 2 days up? It doesn't really work that way, Mike. Wait a minute. Jay, it doesn't work that way. Because any stock you look at, let's go back to here. Let's go to here. All right. USB. Too high. John Deere. Dropped. Fifth Third Bank. Too high. Mendeley's. MDLZ. Bottomed out. Okay. Cardinal Health. CAH. Big drop. Comcast. CMCSA. It's really difficult to find one that's actually in that position right now. Look at this one, Comcast. Up, down, okay? Here's the bottom right here. 1 day up, 2 days up, and then it kept on going. I could do this right here. Okay, I could do that. Okay, see that? 30-day top, drop down 1-2 days to the top side, then you jump in. But I look at them every day to decide what looks good. Constantly selling covered calls which expire worthless to the buyer consistently. Well, Mike, that's what the stock market's all about. Stocks go up, stocks go down. Options go up, options go down. Okay, people buy stocks, stocks go down. People buy stocks, stocks go up. Okay, that's the name of the game. It's kind of like Monopoly. You know, you buy 4 houses, you get a hotel. Okay, Park Place, sent to jail, don't pass go, don't collect $200, all part of the rules. Be there so you can do another covered call. Okay, that works. 86, long calls, I'm guessing. I was going to sell put on Google, but didn't pull the trigger. Okay, great. Redneck 86, yep. I do out a year and like to do calls, but the premiums were not nice. I took my 1K. Okay. And we like you. Thank you, Shoop. It bumped its head, okay, 82, makes sense, blah, 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 glad it works, real, okay, starting out with, starting out with 12 bucks. Believe it or not, you can start with 12 bucks, as silly as it sounds, because they have something that's called dividend capturing. Dividend capturing, you buy a stock, when it goes up, you capture the dividend, then you sell it at higher than what you paid for it, okay? Now, as the stock comes up to the dividend date, okay, let's take a look at Caterpillar. Okay, if you buy it 2 weeks before, okay, as the stock goes up, you take your profits, you get out. Now, the nice thing about companies nowadays, you can do what's called fractional shares. Now, you might not be able to afford a $42 stock, but $12 would give you a quarter, right? 25% of that, because they call it fractional shares. They take a share and they cut it up in little fractions. So if you're going to invest $12 into Comcast, well, you're only going to get a little over a quarter of a percent. So if the dividend's $4, you'll get $1. But then you're slowly increasing, and you just keep on doing it. What are you talking about when you say strikes? Carry deals, we already did that. Stock price is the covered call option. Yep, yep, yep. 86. Okay, we got 2 more people out there. Split the difference. How's it going? Hakuna Matata. How are things over in Sweden today? Or is it Switzerland? Why is it I can't get that quite right? Is that Switzerland? Anyway, Hakuna is here from Switzerland. I don't even know what time it is over there. Anyway, best description you heard. You're welcome. You will learn it. Just watch every video you can and study. That makes sense. Bama Redneck. Just kidding. Okay, Mark. If they all expire on Friday, when do you normally do your purchase? Monday. Paul. Everyone should be part of your class if they're serious. Yep. Sweden. Okay, I'll get it eventually. Any good covered calls on your list this week? Bobby, we already did them all. Okay, tomorrow's Thursday. Tomorrow is just a balancing act. We take a look at what we bought. We take a look at what we think is going to happen on Friday. See, the funny thing is, I buy all my stocks on a Monday, okay? And I sell all my options on a Monday. Now, they're going to expire on Friday. So here's a great quote by a great man. We don't know the answers of Friday afternoon with the information we possess at 10:52 on a Wednesday night. A whole lot can happen tomorrow, and a whole lot can happen Friday before the market closes. So that being said, we just keep our eye on it and see what's going on. That way we can make judgments of what we think we might do when Friday gets here. Okay, Barber Talk, SMCI. No, I don't like that one. Carry deals, you want regular cash flow? Cool beans. I don't like SMCI. The reason why I don't like SMCI Okay, SMCI, I want to look at the dividends only. See, look. SMCI, there are no dividends at this time frame. Okay, so SMCI, that's a no. 86 beat me to it. Ford is looking juicy, 1050 strike. Okay, see, Bobby, I got a minor issue with Ford. So let's take a look at Ford. Okay, look at that. Now, someone was asking earlier about a 2 days to the upside. Okay? Now, 30 days ago, we're at 1050. Monday was the high of the 30-day period, 1138, 39, something like that. But look at the big drop. Okay, went down to what, 1018, something like that. Today, she was up. We even talked about this yesterday. Who remembers us talking about Ford yesterday with this big, huge drop and that huge amount of volume, and it's going to jump up today? Well, it did. It went up today. All right. Keep on. What do I think about Ethereum? I don't do cryptocurrency. AMD, Archer Daniels. I like Archer Daniels. That's Advanced Micro Division. Oh, sorry. ADM is Archer Daniels. AMD is Advanced Micro Devices. They have no dividends either. That's a no also. Barber, MU, Micron, right? Show it in the pad. I have no idea what PADT is. Hey, Club Bed Tom. So, for what instances do you roll your covered calls on Friday before it expires? Well, if the stock jumps up quick and I'm in jeopardy of my stocks being called away less than what I paid for them. Okay, so every once in a while, if you buy a stock for 170, it's currently at 148, and you sell the 150s, and then she jumps up to 170, well, you're going to be called out down here, but you bought up here, and you're going to lose that amount. That's when I roll forward. I don't like taking losses. Barber talk. Let's take a look at AMD. Okay, a year ago is the bottom, 95.58. Topped out at 226. What is that? 200% increase. Then she dropped, back up, back down, back up, back down. Okay, 147 at this moment in time. The 147s are going for 575. Well, that's because they have no dividends. Okay, now, when companies don't have any dividends, how can you figure out when and if they are going to move? It's very challenging. Okay, now, that being said, I would be looking for a 30-day bottom. Currently, you have a 30-day bottom here, but you don't know what's going to happen tomorrow. But more than likely, this thing is going to move up tomorrow because you got a big gap down here. And look at the volume, the blue line behind it. There's a lot of volume, big drop. More than likely, this is going to go open up and then it's going to shoot up. More than likely. Now, I only say that because of other stocks that have the same setup, have the same scenario, where it's a nice high, big drop. Now, I always tell people, and this is something I say a lot, it's not a profit until you take it. So look, up, down, people start buying down here, it shoots up. If you don't take profit, it's like, wait a minute, I'm going to hold it. I think it might go up to 170. Well, hell no, she dropped back down to 148. If you don't take your profit, the market maker may take it away from you. And that's exactly what he did here, exactly what he did to Ford 2 days ago. Let's keep on going. JPAST, that's AMD, MU. All right, that's in a downturn also. The last 30 days, right there. Okay, 30 days ago, 106, drops all the way down to 98, shoots up to 114, drops, retrace, drops again. Going to be looking for a new bottom within the next 4 or 5 days, maybe a week, who knows. But when the bottom shows up, is it going to give me the money that I'm looking for? 103.60, the closest strike price is going to be the 104. The 104 is going for 355. More than likely, this company has no dividends either. But the numbers look good. Please explain the process, the roles going forward. Oh boy, it's actually pretty simple. Let's take a look at Ford. Ford's in the money at the moment. View trades. Oh, that's a put. I don't want to do that. Yeah, let's do it. Why not? No. Harley Davidson. Why the hell not? Okay, so Harley Davidson at this moment in time. Oops, we gotta pull it up first. Okay. Harley Davidson at this moment in time. The high's right here, 30 days ago, dropped, retraced, dropped again, made a 30-day bottom here last Thursday. 1, 2, 3 days to the upside, and then she pulled down just a little bit today. So today's bottom is lower than yesterday's bottom, but it's still higher than the 30-day bottom, which was last Thursday. All right, so hypothetically speaking, I am into this one at $35. See that? 35. I sold off the 34s for next week. So how do you roll forward? Simple. Right click on your position. Okay. Window will open up. See it? Down here it says create rolling order. Click there. Get rid of this. We don't need to see this anymore. Now, it will tell you exactly what you're doing because it's self-filling. It fills itself. Now, I have 3,000 shares, so that's 30 contracts. So, I am, see the little minus sign and the little plus sign? Okay, the minus sign means I'm selling. The plus sign means I'm buying. So, I am buying 8 November 24. That's next Friday's. I'm buying that back. And then I am turning around and I'm selling 15 November, which is 3 weeks out. Now, for that, I am getting another 25-cent credit on top of the credits I've already received. Not quite 1%, but still a credit. What does this do for me? Basically, it gives me a little bit less than 1%, but it gives me 7 extra days. Okay, so if the position that I am currently in is too close to the money or I feel uncomfortable, I will roll it forward for 1 week, gain some more time, collect a little bit more premium, and then be a little bit safer for a little bit longer. Okay, sometimes it backfires. Okay, it backfired on Win on me. Okay, so let's take a look at Win. I'll show you exactly how it backfired. WYNN. Okay? Now, take a look here. August 5th. August 5th is the bottom of the year. Now, when it was the bottom of the year, I sold, because it's currently at 72.12, I sold the 77s and I collected a premium. But I jumped into Win originally at 98. I dollar cost average down at 85. I dollar cost average down again at 81. So my average price now is 87. So I'm into it at 87. You'd think I would be happy because current price right now is 98. But no, it doesn't work that way. Because back in August, when it was in the 70s, I sold the 77. See the 77 right there? Which gave the right to someone to buy it from me at 77. But when she shot way up, right, way up to here at 108, I still have the option for someone to buy it from me at 77. And that's $30 a share. Now, I got 1,400 shares, 1,400 at $31 a share. Okay, it means I would have to buy them back at $3,100 a share. So what does that come to? $3,100 a share. Oh wait, sorry, $30 a share. $31 a share, sorry. $31, how much was it? $31.10, and I have 1,400. Okay, so $31.10. Now, I got 1,400 shares. So, multiply 1,400. Comes to a grand total of a $43,000 loss. If I let it get expired. But I didn't. I rolled it forward. Okay? See, currently it's going to expire this Friday. Okay? I'm up Schitt's Creek. No, I'm not. Because right now, at 77, whoever bought it from me at $31.10. Okay? But it's currently only worth $21.70. So whoever bought it lost 30%. So here's the thing. Are they going to buy it from me at 77? No. Because if they buy it from me at 77, they've already paid $31, which means their average cost basis, which is the premium, $31, plus the strike price. That's the agreed purchase price. Paul, hold that thought. Okay? You add those two together, and that is what their cost basis is. So if they are going to buy it from me at 77, their average cost would be $108.10. Well, who in their right mind is going to pay $108.10 when they can go buy it for 98? It makes no sense at all. So whoever bought this is not going to exercise it. Okay, so I'm going to wait until the last minute so I can roll it forward to gain another week. So as I gain another week, the stock price will slowly drop, eventually getting down here. Now, eventually, I can roll it forward and I can move the strike price up. Next week, I can go up to 78. Week after that, I can go to 79. Week after that, 80, then 81, and then up to where they meet. Okay? I won't be losing any money, but I also won't be dishing out the $43,000 loss. Okay, so it's protecting, the rolling it forward is protecting me from losing, right? So Paul had a question. Buyback win at 31.10. Let them go for a loss. Oh, hell no. How much would the loss be? Dude, the loss would be $43,000. Ain't no freaking way that's happening. Okay? This account is only up like, what is it? Currently 54,000, and you want me to take a $43,000 loss? Ain't happening. Okay? I will continually roll it forward and keep that, because I only got 53,000 into it. So that 53,000 is going to stay where it is, and I'm going to keep pushing it forward week after week after week. And I'll keep collecting the dividends, fine, and I'll keep collecting a premium, fine. It's not as if I'm losing money. The only time I lose money is if I sell for less than what I paid for it. Okay, so this one caught me by surprise. So did I know? Did anybody know this was going to happen? Look. Gapped up once, gapped up twice, gapped up 3 times, big, huge day. Okay, I'm looking at it. I'm looking at this right here. Okay, I'm looking at that. All right, no big deal. It's at 80. Great, I'll come back to 77. Not a big deal. But watch as the days progress. Very next day, who knew that was coming? Okay, with a gap up like that and a high like that, there's got to be profit taking. No. What the hell? Jumped again. Okay, go to the next day. Jumped again. Next day, up again. Up again. Up again. Up again. And it kept going up and up and up. And it kept getting further and further out of my reach. So when I roll it forward, okay, nobody is going to pay $108 for a $90 stock. That's just freaking crazy. So I keep rolling it forward. And as the premiums slowly decrease, I can increase my strike price, and eventually I will be out and I won't lose any money. That's the name of the game. Safe, predictable, consistent, no losses. Okay? But I'm still up over 1% every single week. So no, Paul, I ain't buying that sucker back. Hell no. No. All right, anyway. Where are we? Give us an example of how your strategy loses. I just showed you that one. Now, it doesn't really lose, okay? User 65, 69, 14, 48. I'm going to call you Peter. All right, Peter, all right? You don't lose money until you sell for less than what you paid for it. It's all a numbers game. If the odds and probabilities are in your favor, always make sure you have the upper hand. That is one of the extremely important factors that come along with the morning trading group, because we have a whole bunch of people there. We can look at it from all different angles. Because ever since I learned the rolling strategy, I haven't lost a single trade. Hello, just subscribe. Please shout out Saini. I have no idea how to pronounce that first name. Terribly sorry, but welcome to the group. All right, anyway, let's keep on going. What else do we have? I'm new here. What platform analyze the data? Do you pay a fee? No, this is Think or Swim, okay? It is free to use for a short period of time. If you really like it, this is where I do all my trading, or most of my trading, because I like all of the accoutrements that come along with it, all the perks. Okay, I haven't yet seen another trading platform that has as much information as this one does. Gold and silver, which is better physical investment? All right, I don't do that. That's not investment, that's a dust collector. Okay? An investment is something that gives you a cash return on a weekly or monthly basis or annual basis. Gold and silver do not give you returns. It is a storage facility of wealth. Okay, so if you took $1,000 in gold and buried it, you took $1,000 in cash and buried it, yeah, 50 years from now, the gold will have more value than $1,000 in cash. It's a storage of wealth. You will not get a cash flow from it. It's not an investment. Please explain the roll forward. We already did that. If you sell at a loss. All right. MU has dividends. Yes, it does. We just looked at MU. MU. Okay, right there. Let's get out of that. We don't need that. Okay, so MU 30 days ago, look, drop, up, down, up, down. It's coming down. It's one of those ones I just sit and wait until you find the bottom before she turns around and goes back up again. It's getting late. My eyes are getting heavy. My sights were dim. It's time to stop for the night. Is this still working? This checker turned off. I hate when that happens. Nobody told me the microphone turned off. Is this one on? Alrighty. Alright, ET. No, I don't like energy transfer, Blue Horseshoe. The reason why I don't like energy transfer, nothing against the company. It's the market maker. Okay? Look at the premiums. Okay? 1651, the 17s, 5 cents. One strikeout. Look at then there's a bunch of zeros. Yeah. Okay, I got caught too many times with ET. Even if it goes down or up a little bit in the wrong direction, you're getting nothing. Only 3 years, he likes 20 years. Thanks, Redneck. What about Visa? Ooh, I like a Visa. Here we go, Visa. Visa is going to be a no. Okay, new 30-day high. Okay, ask yourself a question. It's at a 30-day high now, and it gapped up. All right? Now, if you're an investor and you own Visa, and you bought somewhere down here, and then it gaps up today and shoots on up like that, are you going to take your profits, or are you going to let it run? Now, there are a lot of people out there just like me. You see a gap up and a jump up like that, yeah, take your profits and run. Because if you don't, you're susceptible to profit taking and the stock drops. It's not a profit until you take it. All right, gold option premium looks good. Yep, now like it. Why would you lose the money for win? I'm not going to lose money for win. I'm saying if I sold it at a loss or if I bought those option backs, that would be losing money. So it always comes down to a math problem. Where did I get in? What did I sell? Now remember I told you I jumped in at 8, I jumped in originally at 98. I dollar cost average down to 87. 87 is my average price. At 87, when the stock was down to 72, I sold the call at 77. That gave somebody the right, not the obligation, gave them the right to buy it from me at 77. When the stock jumped way up, okay, they could have exercised that option and bought it from me from 77. But I rolled it forward every week. By rolling it forward, I gain an extra week, and it also makes it further and further out for whoever bought that, so they don't do it. Rob, how are you doing? So as you roll forward, you gain more time. Time is a huge asset. And for that time, someone has to pay for it. So whoever paid for it, they paid $31 per share. So their effective sale price, they could still buy it at 77, but they already paid 31 for the option to buy it at 77. You add those two together, it comes to 108.10. Okay, nobody in their right mind is going to pay 108 for a stock that they can just go turn around and buy it for 98 bucks or 93 bucks, whatever it is now. So the numbers just didn't look right. Ashu Kind, how are you today? You want to co-host? Cool beans. I'm going to say no because I don't know you. Rob, how are you doing? That's an inappropriate question, but I do appreciate you being thoughtful like that. It costs money to roll. No, it does not. Okay, let me go back to it again. WYNN. Okay, right down to here. Okay, now, back in August, I sold the right to someone to buy it from me at 77. Okay? A week later, I rolled it forward. I rolled it forward, I rolled it forward, till we finally get to this point here. Whoever bought that option from me, somebody did, and they paid $31 a share. Okay? The 77 call option, $31.10 a share. Somebody was crazy enough to pay for that. That was $43,540. Somebody paid for the right to buy that option, buy that stock from me. But they never exercised it because the stock started to come down. Okay? The effective sale price was 108.10. Well, look at the high. The high was only 107.81. Who's going to pay 108.10 for a stock they can buy for 107? It just didn't make financial sense. Okay? So as the time ticked away, that was the high. It's slowly dropping. As it's dropping, well, currently the option right now, which expires Friday, it was at its peak 31.10. Now it's only worth 21.70. Okay, more than likely the person who bought that option is going to sell the option and not exercise the option. So that means I get to keep my stocks. Okay, so if my stocks actually sold at 77, I would lose the difference between 77 and 87, which is $10 a share. $10 a share for 1,400 shares. Well, that's $2,800. Do I want to lose $2,800? No. I just assume roll it forward. So if I try to roll it forward, look, right at this moment in time, it's only worth 5 cents. Okay, if I rolled it forward. So I might have to take that 5 cents and get it. Are you excited for Trump to win next Tuesday? Arnold, I keep my political opinions to myself because it's a 50-50 shot. The person who I'm talking to might be a Democrat, and those are irrational people. You can't have a rational conversation with Democrats. At least that's what I've come across. All right, so let's keep on going. Curious Cat, first time here. How are you this evening? And no, it doesn't cost money to roll. You can roll for free. IRM. What the heck is IRM? IRM. Iron Mountain. Yeah, hell no. 2 reasons why it's a hell no. Who came up with that one? Peter? All right, Peter, IRM, take a look. All right, you're one of those people who are definitely in the wrong place. The reason I know that, well, number one, it's a monthly optionable stock. I don't do monthlies. The numbers just don't work in my favor. It's nothing but a waste of my time. Arnold, did you listen? No, I did not. And look, it's going up, 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 up. I do not buy at a high. Okay? Now, if by chance the market maker drops it down and takes away your profit, well, that's your own damn fault. It ain't a profit until you take it. It's a 50-50 shot. Okay? It's either going to continue to go up or there's going to be profit taking. What do you want to do? That's basically where you are. You want me to take a look at it? Well, here it is. Okay? The high of the year was 130. What was it exactly? 130.24. Well, currently it's at 127. Could it be starting to come down? It might. You just don't know. Okay, so Arnold, do me a favor. Some things, keep to yourself, because we're here to learn investing with dividend stocks for weekly cash flow. Some personal information should be kept personal. There is a small fee if you're using Schwab. Yeah, they call that a transaction fee. There's a small fee with every trading platform you use. Okay, they say that Robinhood is free. No, it's not. There's a fee there also. You can watch him on YouTube and follow along with your computer. I see you don't like liberals either. Okay, like I said, I keep my opinions about politics to myself. Home Depot. Chucky wants to, okay, wait, is that Peter? Peter wants to look at Home Depot. Home Depot is a dividend king. A little out of my price range, but it's going to be a no, like everything else this week. it's down. Okay, your 30-day high was 2 weeks ago. And you got your profit taken. How low is it going to go before it turns around? Well, today was a little bit higher than yesterday. So today was a little bit higher. So could tomorrow be 2 days to the upside? Could be. Holy cow, I caught up with all the questions. Tenzin. Think no Swiss cheese. I think Swedish meatball. Ooh, I like Swedish meatballs. And the Swedish chef. Oh, yes, I like the Swedish chef. He was funny. Oh, Milton. Milton, how's it going? You want to take a look at Target. TGT. Target, well, that wasn't down today. Nice. Target is a dividend king. So how will rolling forward end? Usually the way it ends is that I get out of the position. That's basically it. I mean, I don't buy anything to hold on to, okay? Now, I've been holding on to Win since May. So now we're currently coming into month number 6 of holding of holding Win. Okay, last year, the longest I held anything, okay, in my 15 years of trading was Kimberly Clark last year. I held it for 9 months. But the interesting thing about holding a stock for 9 months, I captured 3 dividends and 33 or 36 premiums. So I constantly had cash flow coming in every single week. It wasn't 1% every single week. Some weeks were 1%, some were 2%, some were 3%, some was 0.5%, some was 1/3%. Okay, but I always had something coming in. Most people buy a stock and just get the dividend, once every 90 days, and they're perfectly fine with that. Well, I'm fine with getting a dividend and getting premiums. Meant, do you end in paying for rolling forward? No, you never end in paying forward. Alex, yeah, I heard that too. Arnold, okay. Thanks a lot for sharing. You're welcome. Okay, so Target. Now, we just covered this one, 30 days. What does the 30 days look like for Target? The last 30 days. Here we go. So, 30 days ago, ooh, look at where it is. 30 days ago, we're at 156. We dropped down to the 30-day bottom at 147.50. Up, down, up. Here's the high, 161.50. Drop back down. Hits the 30-day bottom again. Back up, back down. Not quite to the 30-day bottom, but look where she is. We want 2 days to the upside. Today was a little bit higher than yesterday. When you roll, you kill the basis. I'm not 100% sure, Milton. Okay? Because when you roll it forward, the cost doesn't change. Okay? So when I rolled, all right, here we go. Okay. My entry price is never going to change because I'm not going to dollar cost average down anymore. Okay? Now, considering I'm not going to dollar cost average down anymore, my price is 87.53. Okay? I refuse to let it go at 77. All right? Okay, but right now it's at 21.70. Okay, so I got to roll it forward, and when I roll it forward, well, right now, okay, right now it's only a 5-cent credit. So here's the question: do I take what would the loss be? 77, 87, 53. So 1053 times 14. Hold on. Clear. 1053 multiply 1,400 shares comes to a grand total of $14,000. Okay, so if I let it go this week and I don't roll it forward, the market maker will take it from me at 77. That's the downside of selling a call for less than what you paid for it. I don't want that to happen. So if I roll it forward, well, the most I'm going to get now is only 5 cents. But that's going to buy me another week of time. Now, I could also go to the 15th, and that's not being traded, so I have no choice in the matter. I can only do this one. So I'm going to change it. All right, so I'm going to change this order, and I'm going to take that 5 cents, because Thursday and Friday, I got 2 days left, I might not be able to take it. All right. So I just canceled one and I traded it for another. So I'm going to take the 5 cents per share, grab me another week, and then roll it forward again next week. Okay, Peter, that is where I'm still confused as well. I understand your dollar cost average down, but your cost would go up rolling in the money to avoid selling for a loss. I'm not quite sure I understand that. Okay? All right, now, I'm going to read it again slower because it makes no sense to me. That is where you're still confused. Okay, I understand your dollar cost average down. Okay, but your cost would go up rolling in the money call to avoid selling for a loss. No, it won't. Okay, so oh, wait a second, this might be easier. WYNN. Now I want to go all the way up to May, where I jumped in to win. Okay. Did you not have to pay to roll forward? No, I don't have to pay to roll forward. Okay? See here? These are all the trades I made on Win since I bought it. Okay, come way over here. May 7th. This is when I bought it in the first place. May 7th, covered call, buy 400 shares of Win at 98.16. I sold it for 204. Okay? That is over 2% when I first bought it. The very next week, I sold it for $1.21. The very next week, I sold it for $1.15. So $1.13. Okay, the very next week, I sold it for 15, sold it for 57, sold it for 27, sold it for 47, and then I dropped the price, and I got a 30-cent credit. I dropped it again, got a 19-cent credit, a 35-cent credit, and then I dollar cost averaged down at 85.97. Okay, then I sold the 85 calls, and I got 56 cents, not 1%. Then the next week I sold the 67s, and then I bought some more shares at 81.50. Okay, and I sold those for 42. And then I did a, what was that one? By 10, so, oh, then I got another 62-cent credit. Then I got a 122 credit, and then I got a 19-cent credit. All of these are credits. There's no losses there whatsoever. So when you roll forward, okay, you buy back the current week's option, and then you sell the next week's option. Okay? Doesn't cost anything to roll forward unless you're rolling forward for a debit. I only roll forward for a credit because it just doesn't make any sense to me to roll forward for a debit. Rolling forward for a debit means I'm losing money. No, I haven't lost any money on Win yet. Milton, if you roll down, you gain money or more premiums, reducing the cost basis. That is the cost basis on, okay, on the Schwab's website, the history tab on the shops. Okay, I have no idea what that means. But actually, you can see every single one of my trades. Okay, add it all up. My original cost, $98.16. I dollar cost average down 85.97. I dollar cost average down 81.50. Okay. I did roll once, where I bought 10. I sold 10. No, that was a calendar, not a calendar spread. What kind of a spread was that? That was a debit spread. I did a debit spread and I lost because the stock went down. Okay, but I didn't lose any money on this position. Okay, thank you for your time and explanation. I didn't think you could roll forward at credit. Well, yeah, you can. How do you join and how much is your course? Now, remember I said earlier, I'm not selling anything here. Okay, if you want to join the morning group, that's over here on the 10-minute trader. You find that at the top left corner where it says Dividend Stock Talk. You click on there, and that will bring you to my website, the 10-minute trader. And here's where you join to join the morning trading group. Okay, Dividend Stock Talk on Patreon. All the links are in the bio. Like I said, I'm not trying to sell anyone anything here. I'm just sharing information. If you want to join the morning trading group, more the merrier. However, I am going to cut it off at a certain point, and it's getting close to the full point. Call is for far in the money. Yes, it is. But I didn't do it that way on purpose. It just happened that way over time. All right. Holy shit, 11:30. Give out trades for free. No, I don't give any trades out for free. I don't make suggestions. I don't make recommendations. Okay? I read the information that you guys ask me to take a look at. Give you my interpretation. And then I will show you the trades that I did after the fact. The only people I show the trades that I'm doing at the moment are those in my morning trade group. So that being said, let's call it an evening. It's an evening. All right, so you guys have a great day. Hakuna Matata, very nice to see you. James, on your other account, where you do option spreads, do you on average have a higher return compared to this strategy? Of course I do. See, this strategy I give away for free, and it makes about 50% per year. What do you think I'm not giving away for free? That's the question you should be asking. Okay, it's past 11:30. I'm going to turn into a pumpkin. You guys have a great day, and we will see you again tomorrow. All right, done, done, done. And done over here. You sure you want to stop streaming?